Okay, so Narendra, so we have been having some sessions on uh, incorporations, right? Full time versus contracting. So,
Right.
from your experience as a tax consultant, can you help us understand what is the your biggest difference between a full time employment and a incorporated contracting? So, for those who are listening, just one thing is we are going to talk about incorporation taxes, not T4 taxes. So what is the difference? We will get to you on that. But today we are only going to talk about incorporation taxes and its difference to the full-time employment. We are not going to discuss T4 taxes. So Narendra, can you just give a high level or a high view on what is the difference between a full-time employment and a uh, incorporated or a contract job in IT, purely from a tax perspective or a
Yeah,
financial
sure.
perspective.
Yeah, sure. So, basically, the main difference is obviously when you incorporate yourself or you get into contracting, is that you have to manage your own finances rather than employing issuing you T4s. Basically, you decide on how you want to withdraw your compensation from your own company. So when you incorporate yourself, so basically you are playing a dual role over there. One is that you are a employee of your own corporation, and you are also a shareholder and owner of your own corporation. So as a salaried person, as an employee of your company, you can decide whether you want to withdraw salary and how much you want to withdraw. And as an owner of the company, you can decide if you want to get a dividend from your company. So it's obviously it's recommended mostly for people who are making a good amount of revenues. It's normally, unless you have a option, means if you're on a lower income side, then I would avoid to have a corporation, because corporation comes with the cost. Basically, you spend money on incorporating yourself, which is close to 300, 400, $500, depend on which province you are incorporating. And on top of that, then you have to follow all the compliance with CRA. That is, you have to file your HST returns. If you are taking a pay, you have to pay your payroll taxes on regular basis. Then you have to file your corporation tax return, and finally, whatever you withdraw from your company and from all other sources, you file your personal tax return. So it's highly recommended for people who can leave some the income that they generate in the company, can leave something in the corporation to get the benefit of corporation. So why I'm saying that, because the corporation tax rate up to $500,000 of profit is 12.2% in Ontario. So federal rate is 9% plus provincial. So from Ontario perspective, it's 3.2 is Ontario tax rate, and 9% is federal tax rate. So you get a small business deduction. Obviously, to get a small business deduction, owner should be resident of Canada and at least hold more than 50% of shares of the corporation. If you are not holding that, then you get into a normal tax rate, which is around 29%. So, the moment you move money from your corporation to your personal account, you are basically moving money from 12.5% tax rate approximately to a lowest side of 20.5 or 29.6 or 37, depending on how much money you are moving into your personal account. So the you get advantage only if you are not withdrawing everything from your corporation, and you're leaving something inside the corporation for the purposes that may be buying a home down the line, or maybe some investment purposes. So, but if you're going to withdraw each and every cent that you are getting into the corporation, it's better not to incorporate. Better you do your contracting as a sole proprietary. So main advantage is obviously tax, and you need to have proper planning for that. Don't just because everybody is incorporating, just don't just incorporate yourself. First, see that how much funds you need from your corporation, how much, if you're married, then how much your spouse is earning, and whether that other spouse is on salaried or that person is also corporation. So basically, you need to do proper planning uh, uh, before you think of incorporating yourself.
Thank you, Narendra. So, those who don't know what is incorporation, I'll just give a kind of very high level overview what is incorporation means. So, basically, in IT sector, you there are actually three ways of employment. One is full time employment. You are actually the full time employee of the company. The second one is called T4 employment, where you are working as a contract for the client or some consulting firm, but they will actually process your payroll. They will deduct the tax, the company will deduct your tax, and then will give you the rest of the salary. And the third one is basically this incorporated way of doing. So if your per hour rate is, so incorporated mostly works on per hour rate or per day rate. So if your per hour rate is $50, you get the $50. You, as Narendra mentioned previously, you manage the money, you pay the taxes to the government, and the end user or the client or the consulting firm who is paying you $50 is not going to deduct the tax. So the onus is on you, the responsibility is on you to pay the $50 or take the $50 in your pocket, and then decide how much you are going to take the money as your personal account and all, and then you pay the tax from your perspective. So this is a major difference between the full-time employment and contracting employment. For those who doesn't know the incorporation, what is incorporation and all. And in case you guys have any question, please feel free to raise the hand, come to the speaker panel, you can ask the question. We are keeping this as an interactive session, so we try to answer all the questions whichever is possible. Now, second thing is, I have been doing contracting jobs for around 6 years, and I usually try to see a lot of people reach out to me asking, "What is the can I get into contract?" Okay, so there are few things which few parameters. I have written a blog on this. Please check my blog on the parameters, but I'll quickly go through. So one is the job security. Second one is if you're planning to purchase a house, you have to talk with your tax consultant before. If you are a full timer, before you get into contract, ensure that you don't have these house purchase plans and all, because that will have a huge impact. The full time versus contracting will have a huge impact on the purchasing the houses. Then you have to have a very good network before you get into a say, contracting from a full time to a contracting. You should be ready with your resume and attending the interviews anytime, because contracts will get over anytime. Again, it another factor is your spouse's work status. If spouse is working, you have ample uh, time to find out a new contract, so you can actually get into the contracting. Leave plans: if you work as an incorporated contractor, you will not get paid if you are on leave. Taxes: you need to have a very good accountant who can actually plan your incorporation for 1 year and then pay the tax. So one of the huge mistake which I have seen people who gets incorporated is that they get a lot of money, they spend a lot of money, and at the end they go to the tax consultant to file the taxes. That is when they realize that they have already done the damage. Correct me if I am wrong, Narendra, there have been a lot of
Yeah, I
instances.
go through that all the time.
Yeah. So if you are working as an incorporated contracting, you have to get in touch with your tax consultant and plan for 1 year in advance. Do not run to the tax consultant at the end of the contract, because what happens is at that by the time you go to the tax consultant, if you have done the damage, there is nothing you can do. You will end up paying a lot of taxes. So what I do with Narendra is that I meet him once in a month mostly, and I plan for the next quarter what is going to happen, how much tax it's going to come, how can we take care of those things. those things we plan in advance and not at the retro. So we actually plan that in advance. This is one of the most important thing. You have to be very disciplined in planning the taxes when you are trying to get into as a contracting. The fourth one is benefits. Full timers have a lot of benefits. Contractors might not have a lot of the benefits from the client side. No insurance, no health insurance. All these things you have to take. CPP, EI, RRSP, all these things you have to plan with your tax consultant, because that is where everything matters. If something happens to the person who working as a contract, you don't have any health insurance from the client side, you need to take a health insurance outside of the job. Then if you are in work permit, you want to process your PR, that time incorporation contracting might not be a good option, because what happens is you cannot show your work experience. And then discipline. You have to be very disciplined when you are in contracting, especially when it comes to the managing money, or else you will end up losing a lot of the savings you have. So in case you guys have any question, please come to the speaker panel, you can ask the question, or else Narendra, we will continue. So Narendra, what are the common mistakes, or let's start. How do we register an incorporation? Do we need a tax consultant, or can we do it by ourselves? Can you just explain
No,
the process?
you can do, see, in Canada the benefit is that you can do it yourself, but you should know what you are doing. So I will tell you the common mistake that people do is that they sometimes they end up putting their spouse's name there, even though that spouse is working, in the impression that
Mhm.
because I am incorporating, let me, my partner should also be a owner of this company. So that's a very common mistake. You should not do that unless you meet your consultant and you know the situation, the tax implications of that. Because say if you are withdrawing a dividend from your corporation and your spouse is also owner of that company, and in a situation where your spouse is making almost same amount of money or maybe higher than you, so what will happen the moment you declare the dividend, it straight away hits to your spouse income, and that spouse will move to the higher tax slab who is already paying higher taxes. So that's a very common mistake that people end up doing. Second, they end up doing is while registering with CRA for HST, they don't know what they are, means how they have to do that. So they end up selecting a period which they should not select. And there are other things that you have to take care when you're registering yourself for HST with CRA. And yeah, these are the common mistake that people do when incorporating. So if you do yourself, it's easy peasy, you can do it, but just avoid. If you know, then do it, otherwise don't do it just to save for 100, 150, $200. Don't try to do that because it may cost you much more than that at the end of year or when you are going to file your tax returns.
Thank you,
So
Narendra. Oh,
uh,
sorry, go ahead.
other thing is, as I was mentioning, that as a contractor, if you are giving services to your employer in Canada, then you will be charging an HST from your employer. So, say if your base pay is $100, so you'll be charging 13% in case of Ontario, 5% in case of BC, 5% in case of Alberta, like that. So you have to charge that HST, and that HST is a trust money. So basically, you are collecting that money on behalf of government. So you have to remit that money to the government by after filing your tax return, after claiming your input tax credits. But if you are giving service to an employer outside of Canada, then there is no compulsion for you to. You don't have to charge. No, sorry about compulsion. You don't have to charge HST. If you're giving services in Europe or US or India, you don't have to charge HST for that. So, but while filing the HST return, you have to be careful. Means how much services you have given to employer outside Canada and how much you have given inside Canada. Inside also in which province you have provided the service. So Bottom line is talk to your consultant before you take all those kind of decisions to save some money.
Yeah.
Yeah, Sudhir,
Yeah.
what was
Thank you,
you
Narendra.
saying?
Yeah. So I just wanted to add a couple of points to that. So one thing is when you are trying to imagine when you are trying to apply for a new job, they ask you, "Are you incorporated?" So you can say that I am not incorporated. I will incorporate if it goes through. And once you clear the interview, you can incorporate, because this is going to take just 1 day or 1 or 2 days max. Okay. So you don't need to register the incorporation when you are trying to apply for a job. Once you get through the job, and once you are through the process, the interview process, they say that, okay, yes, now we are ready to proceed with you. At that time, you can actually reach out to a consultant, and then you can actually register this incorporation. It will hardly take a day or two. That is one point which I wanted to add. uh, Now, second thing is, when Narendra mentioned about the HST, I wanted to, I'll just throw some numbers. So imagine you are getting $100 per hour. So you will get $100 per hour plus $13. 13 is the HST, at least in Ontario. So what happens is your income or your actual money which is coming to you will be $113 if you are a $100 hour rate. But you actually take that $13 and then you actually pay it to the government. Okay, so that way you actually will have some buffer to play with, but it's not your money, it's actually will go to the government. And before I go to Sobin and Simar, Narendra, can you please explain what are the major taxes we should know about when we are running the incorporation? What are the taxes we are going to encounter?
Yeah, the first obviously I explained you is HST, and second is if you are running your payroll, then you have to pay your regular payroll taxes. So payroll taxes components are Canada Pension Plan (CPP), and because you are a self-employed person, so you don't have to pay EI on your own salary. And the second portion is obviously the tax bracket. Tax it will be based on which bracket you are falling while you when you're running your payroll. So CPP has two components. One is employer and one is employee. So employee portion is deducted from your salary, and employer portion is expense for the company. So even though it's your own corporation, you will end up paying both employer and employee portion because there is no other employer for you. It's your own corporation. So it's 5.95 current rate. So 5.95 times 2, it's around 11% or whatever it is. That is the portion of CPP. Now, a lot of people think that CPP is a tax. It's not actually a tax. Obviously, it's when you're paying, it called as it goes as a payroll tax. But CPP is actually belongs to you. It's a going towards your pension. Whenever you retire, it will come to you ultimately, depending on how much you have contributed to CPP. So the only portion of tax is the federal and provincial tax that you have to pay. So that is also a question that I end up answering a lot of time, that why I have to pay so much of taxes. So you have to understand it's not everything is not tax. It's some is CPP and some is only tax. So the third is once your annual year is done, you have paid your HSTs, you have paid your payroll taxes, then your corporation, because now you are again you are owner of the corporation. So, like any other employer, your corporation will issue you T4 because you are an employee of the company. Now, say in case you have taken extra over and above your salary, whatever you decided, then your corporation will issue you your T5, which because you are shareholder of the company, so you are taking a dividend from your corporation. So all these things plus if you have other source of income, everything goes together in your personal taxes. So when you're filing your personal tax, on one side you are getting your T4 from payroll, you're getting your T5 from dividend, you're getting interest income maybe from your deposits in banks. So everything goes together, and based on uh, uh, tax slab that you move into because of the total income of payroll plus dividend plus interest, that time when you're filing your personal tax return, that time it will, if there is any difference of taxes that you have paid less, so you will end up paying taxes at the time of filing of your personal tax return. So that's why the period between when you are running your payroll, you're taking your dividend, and when you're filing your corporation tax and personal tax, you need to meet your consultants and plan out properly so that you don't end up paying lot of taxes when you're filing your personal tax return. Otherwise, you will ultimately defy the whole purpose, one purpose of the corporation, that is paying less taxes.
Thank you, Narendra. So let's go to Sobin. Sobin.
Hey, hi Sudhir. Thanks for hosting this program, and Arindra for sharing the input. Just one question on the contracting. So, is contracting tied up to the type of business you're doing, or can I add n number of business under that one contract?
You can do it, depend on your contractor, right? Because in IT, I'm not sure, means Sudhir may be able to answer that
No,
question,
Narendra,
but
what he's asking is if you register one incorporation, can he run multiple business under the same incorporation?
you
Like
can you
not
can run,
IT, but
but you
yeah.
can you can run, but you should be able to differentiate all the businesses.
Yeah. So maybe I'll just give a example, Sobin. So
Okay.
what happens is, see, one of the benefit of getting incorporated is, right, to manage the money, to pay less taxes or whatever, and then to keep out our responsibilities. Okay. So not sorry, not responsibilities. What is that? I forgot that name. So what happens is when you are trying to run multiple businesses from same incorporation,
Hmm.
yes, it actually helps managing the incorporation, because you need only one accountant, sorry, one tax filing for that
Profile.
entire
Yeah.
incorporation.
Hmm.
But at the same time, if it is multiple, if you are trying to run a restaurant and a IT company in
Hmm.
the same incorporation, I personally wouldn't recommend, and I believe Narendra will also not recommend. That time what we try to do is we try to keep it separate, because the way we manage the expenses are totally different for these two things. But if you are running a IT consultancy service and IT training service, yes, I think one incorporation should be fine. But if you are trying to run two separate businesses, uh, the recommendation is uh, to keep it separate again.
We won't recommend doing that.
Yeah,
Okay. Keep it
provided.
a
If
specific
the
type of
nature of
business.
business is totally different, I would keep the both the business separate
That's right.
from each
Okay.
other.
Again, this is just an informational session. If you have any your personal questions, you have to talk to the tax
We can
consultant before you
access.
make the decision.
Okay.
Because see, registering a new incorporation, maybe it will be around $500. Okay, but that $500 will save you a lot of money later on. I cannot reveal the details right now here in this session, but there are benefits if you keep it separate. There are benefits if you keep it together. It totally
Yeah.
depends upon the personal uh, situation.
It depend on you. It depend on your tax consultant.
Oh yes, that is very important.
How he is guiding you.
Yeah,
Yeah. There is one more question. This will be the
sure.
last one.
No, please.
That is, I came to know. I don't know if rumors are true that most of the IT folks and probably I don't know if other type of businesses are moving more into contractual just to write off the expenses and save the taxes. And I came to know that government is trying to find. I don't know if this is a loophole or this is a process right now to control on top of it. Is it something going to happen in near future? Any idea about it? Like, have you heard about whether it's true or so?
So basically, the problem is the word write-off. Now, the thing is that a lot of people end up claiming the expenses which they should not be claiming in the corporation.
Correct.
So, whether it's a contractual job or anything, if you're doing something beyond the set ratios of government, so then obviously you are inviting a problem from them. Say for an IT professional, there are hardly expenses that you should be claiming, but people end up claiming unnecessary expenses there,
Correct.
and
Yeah.
that's where you invite a problem from the government. So you have to understand that we are here for 10 year, 15 year, 20 year. This tax department is there for 100 year, right? They
Hmm.
know each and every industry, that how
Percentage
much
can be claimed.
expenses,
Hmm.
how much and what kind of expenses this industry incurs. So if you are obviously going beyond their ratios, obviously you are inviting problem from them. Whether they catch you today or they catch you after 5 years, they are going to catch you. So I
Okay.
that's why I am saying that it's highly recommend that instead of getting into these type of problem, better you do your tax planning properly,
Hmm.
uh, and keep CRA away from your life. You don't want them in your life. Once they enter in, you are done. Every year they will be calling you that okay, now come in. What did you did this year? What did you did next year? So
All
just
right. Okay.
do proper planning.
Okay.
Avoid. That's what Sudhir was mentioning. Don't get into year end sort of thing. A lot of people, they don't do anything. They just withdraw everything from the corporation. That at the end of year they'll go to their tax consultant, and then they will put pressure on them that we don't want to pay a lot of taxes. But damage is already done. What tax consultant is going to do? He will claim some expense here. He will claim some expense there. Ultimately, who is responsible for those things? You are signing it off. You are saying, okay, these all statements are correct. Your accountant is saying, I have just compiled it. So accountant has no responsibility. It's your responsibility. You are signing it off. So
Okay.
tomorrow problems comes, you can't go to your accountant and say, you did this. I didn't know this. You are signing it off. Accountant will say, no, you have given me the information. I just compiled it. So avoid year-end sort of meeting with your accountant. Better do proper planning, and you can save your taxes. You can plan out your expenses properly.
Yeah, just adding to it. So what happens is I'll just give a random number. So if you are not going and doing the proper planning and taking the money, playing around with the money in from your incorporation account, so for a 1 year contract, you will you be completely using that 10 and a half months of or 9.5 months of money, and the last 2.5 months of money equivalent will go as tax if you are not planning it properly. I have seen a lot of people doing that. Final 2 months, 2.5 months, they don't have money because everything they have to pay in as a tax because they already made the damage. So that is a kind of ratio. What we would say, so around 75 percentage you will spend initially, and the remaining 25 percentage at the year end it will go as a tax. I'm
All
just
right.
giving a rough figure so that you it's clear for you.
All right.
Okay,
Thanks.
thanks,
Thanks.
Open.
Yeah.
Yeah, let's go to Ankit. Ankit, you there?
Yes, I'm here. Sorry, I was on mute. So,
Yeah, no
firstly,
worries, Ankit.
thank you, Sudhir and Narendra, for hosting this session. Super helpful. So, I have two questions. One is I read somewhere about the personal service business not being considered as a qualifier for small business deduction for incorporation. So, that's first question. And second, I wanted to hear your thoughts on how does the quick method work for HST, because I've heard from some friends who are doing contracting that they charge 13%, but they only remit 8% at the end of the year towards HST in the quick method. So those are the two questions I had.
So, with reference to personal service business, uh, it's a very complex thing because as per CRA, if you are working for only one employer in a year, and the employer is deciding on your timing, employer is giving you all the tools, employer is basically deciding everything on what you can do and what you cannot do, then CRA may come up and they may say that it's a personal service business. So, but in contracting, basically, you're not working for one means. Sometimes you may be working for one employer, maybe whole year. Sometimes you are maybe working for one employer, couple of months, then you are going to other employer, and there are no as such restriction on the times that employer is putting on you, that you have to work from 9 to 6 or 9 to 5. You, if you are able to come up with all those explanations, then that may not be considered as personal service business. So there is no straightforward answer for this, to be very honest with you.
Yeah,
And
Ankit, it
second
totally
question
depends on.
about the HST. And also, I don't want to get into any kind of discussion on this matter, because it's a, very complex nature of question. So I will restrict myself from answering each and every question on this particular matter.
No worries. Thank you.
So,
Thank you very
Ankit,
much.
And
it
second
again
is
totally depends upon your accountant. Okay.
second
Okay.
is the quick method. So basically, as I told you, when you are registering yourself for HST, you have to inform CRA that you are going to apply quick method of HST for filing your tax return. And what is quick method is basically, if you have elected quick method, you don't have to provide any kind of receipt for the expenses. So it's a straight. So in a normal method, basically what happens, whatever ITC you are claiming, input tax credits, you should have copy of each and every receipt for that. So that if CRA comes and asks you, so you are able to produce that, okay, for these expenses I have claimed ITCs. Uh, because of nature of our industry, the IT, we in IT industry there are hardly expenses where you have ITCs. You may have ITC on your phone bill, or some gas expense if you are going to see your client. So there are hardly expenses where you incur ITC. So it's recommendable for IT consultant to elect a quick method where you just pay 8.8% of your gross income as ITC, and you don't have to keep any receipts, and you basically end up saving around 3% in HST.
Thank you.
So, Ankit, just keep one thing in mind. See, for everyone, those who are listening, right? All these depends upon how much your income is. That's a big factor. Okay, so in your this is specifically an information session, but personally, if you are trying to do these things, it totally depends upon how much your income is. If it is just a small business running here and there, that is a totally different ball game. And if you are getting $100 per hour, that is totally different ball game. So you have to check with your tax consultant. This is just an informational session for everyone's awareness. Okay, Ankit.
Understood. Thank you, Sudhir.
Thank you. Thanks. Let's go to Shiv.
Hi, Narendra. This is Shiv.
Yeah.
And thank you, Sudhir, for hosting this event. And thank you, Narendra, for some of these amazing insights. My question is twofold. The first thing is I'm trying to understand how to give ourselves dividend from our own incorporation. And can this be done in a monthly way, if possible, to cover some of our personal expenses? And the second thing is about GST. Uh, does it work the same way? Do we have to have like separate allocation for GST, or should we talk to our contractor about having them GST paid to us and we pay the government back? So just trying to understand how these two things work. Thank you.
So as soon as you register, your contractor is asking you to register for your corporation, and then you are asking your business number. It is basically contractor knows that they are going to pay HST or GST, depend on the province, to you. So in your contract, it will be specifically mentioned that this is your base plus HST or plus GST you are going to receive. So it's very black and white. It's not nothing that that contractor is going to hide from you or your employee is going to hide from you. And regarding the dividend, yes, you can declare dividend on monthly basis or whatever way you want. But just keep in mind that just to save some tax. Actually, you don't save lot of taxes. Only thing what you save on doing or doing the damage is that you end up paying no CPP. Now there might be people who don't care about CPP, and there might be people that who wants that there is some nest of CPP building up slowly and gradually, because you don't know in retirement what's going to happen. So only thing you save by declaring dividend is that you're not paying CPP, nothing else. Because tax rate at the end of year, whether you're incorporated or you're personal, will depend on how much money you have withdrawn from your corporation. So if a salaried person is making 100,000 and he's paying $30,000 of taxes, I'm talking about taxes, not CPP. I'm just talking about tax. So, and if you are making 100,000 from your corporation in shape of dividend, your tax will be almost same, 30,000. It might be 28, 29, but it will be same. Otherwise, nobody will want to work under a corporation. Everybody will want to work under a corporation, not as an employee. So, means the way they have structured the whole tax system is that tax will be same for everybody. It's not that T4 employee is going to pay more taxes, and because you are taking dividend, you will be paying less taxes. Only thing you're not paying is CPP. Tax will be same. Now, the and you have to understand that how what is the impact of salary and dividend in your corporation. So salary is an expense for your company. Dividend is paid out of after tax profit of the company. What does that mean? That say your company has made $100 and you took salary of say $50. Now you have a profit of $50. You pay tax. Your corporation pay tax on that $50. Now say you paid $10 taxes and you're left with $40. Dividend is paid out of this $40. That means your corporation has already paid 12.2 taxes on that money which is left over. Now, the moment you take this money $40 to your personal account, what will happen? That when you're filing your personal tax return, you will get the credit of 12.2% which your corporation has already paid, and then you pay the difference when you're filing your personal tax return. So there is very big misconception among the people that you pay less taxes. It's not, you're not paying less taxes. You're paying same taxes. Only thing you're not paying is CPP, because on dividends there is no CPP. On salary there is CPP. On dividends, if you are taking only dividends, you are not creating your RRSP room. If you are taking salary, you are creating RRSP room. So basically, you are going to compromise on lot of places by just taking dividend. And you can take monthly, it's your company. You can take weekly, bi-weekly, whatever way you want. You can take dividend when it's your own company, you're owner of the company.
Yeah, so basically, for those who didn't understand the concept of dividend, so basically, there are two ways by which we can take the money out of our incorporation to our personal account. One is by payroll, which is running the payroll monthly, like a salary. Second one is dividend. That is what Narendra has explained. So payroll means you will end up paying EI, sorry, not EI, CPP. But for the dividend, there is no CPP. And now if you didn't understand, just listen to this recording once more, and you will be clear on what is this difference between dividend and uh, payroll. Okay, this is very very important, because this is something which you have to talk to the tax consultant when you are working as an incorporated person. You have to work with the tax consultant to understand how much money you have to withdraw as a payroll, which is a salary versus dividend. Because salary has few advantages. You will pay CPP, you will get RRSP rooms and all. But if you are only taking the money out as dividend, you will lose that RRSP room and CPP. Correct, Narendra?
Yeah.
Okay. So Where is Shiv? Did that answer?
Yes, sir, that is perfect, and I really appreciate you answering these questions. If you don't mind, I just have like one quick last follow-up question. Is there like a limit on like how much we can expense from our internet, phone bill, or utilities that we
Yeah,
use
so
in our
so
business?
Shiv, that is something which I'm not comfortable answering in this forum. That is the only thing which I have discussed with Narendra, that please do not answer this question. The expenses is totally depending upon the company which, or the type of company you run, plus your accountant, plus your expenses, how much you are spending and all. It is never same for two people. So I would strongly take it offline. Sorry for that. That thing
No,
will
no
not be able
problem.
to answer. Okay.
No,
Yeah. Okay.
absolutely no problem at all. Thank you so much, Sudhir.
Thanks you. Yeah. Let's go to Girish. Hey, Girish.
Yeah, hi. So thank you, Narendra, thank you, Sudhir, for hosting this. I have three questions. One is so I have incorporation for a company which are working for US. So I should not charge HST and GST. So
Yeah,
both should not be.
you are not supposed to. Even if you will charge, your employer will not pay you
Okay.
because
So
because
that
it's a
we need,
US
do we
registered
need to pay?
company.
Do we need to pay for this to the government? Nothing, right?
No, no,
GST.
no.
Okay.
Though you will be able to claim HST on the expenses that you may be incurring for your corporation.
Okay.
So
So I can.
you may ask refund from CRA for the actual expenses that you are incurring to run your business.
Okay. So I can. Okay. So
Yeah,
GST. What about GST?
yeah, that's
So
what I'm saying. I'm talking about
okay,
HST,
both.
GST, HST, both. Yeah.
Okay. And second thing is, so if I have a business credit card and if I'm not going to take any dividend and anything, so if I spend on the credit card and if I pay from the business account, so will that be considered as a tax? So I need to pay for the credit card, whatever charges I did.
Depend on the expenses that you're incurring through your credit card.
Okay,
So
okay.
it's a business credit card. So business credit card means obviously your corporation is going to pay whatever monthly bill that credit card will generate.
Hmm.
Then everything will boil down to yourself and your accountant on what expenses you want to claim from the expenses that you incurred through your business credit card.
Okay, should we keep all the bills for the transaction or
Officially, yes,
okay,
for 6 years.
okay.
Yeah, they
Yeah,
can come back
last.
at they can come back in any time in 6 years.
Even though you can't read it after 6 months, but officially, yes, you have to keep it.
Okay. The last question is so things to do after opening a incorporation account. So should we to file the initial tax? So right now most of the people are busy with Sierra, busy with the last year tax. So this year, so once we
So
open incorporation, we need to create the initial register the initial tax.
yeah, maybe Narendra,
Yeah.
I will start with it. After that, you can continue.
Yeah.
So basically, what happens is when you are doing the incorporation, right? This is
Mhm.
how you are supposed to do. This is for everyone. This is just an information thing. Personal things will change. It will change from scenario to scenario. But this is how the end-to-end process is. So basically, imagine you get a job or you are going to start a business. You go and meet your tax consultant and you will tell that, okay, this is my requirement. I'm going to do business in across Canada. So then he'll say that, okay, let us do a federal incorporation. Or you say that I'm doing only business in Ontario. So they may end up starting Ontario business. You will go to a tax consultant. He or she will register it, or you can register it by yourself. So once you register it, you, depending upon how much the income is, you have to register for a business number. Okay.
Mhm.
Once you register the business number, then you start the business. Again, there are a lot of different process. I'm just giving the high level
Okay.
things.
Yeah.
Once the business starts, you start getting money. That time you go back to the accountant and you plan for 6 months or 1 quarter, or 6 months or 1 year. This is very very important, or else what happens is you will start getting the money, you may miss the payments depending upon the income. Reason I'm saying depending upon the income is because there is a threshold above which you have to pay taxes per quarter. HST per quarter you have to pay. So depending
Mhm.
upon the total income you are getting, you will work with the tax accountant, and then set up your tax paying dates. Okay, this is the financial year. This is a financial year for our organization. These are the dates where we have to pay HST. And if you have employees, if you are running payroll, you have to you have to pay taxes, personal taxes, every 15th, every month 15 you have to pay. So for example, for the payroll which has done in March, you have to pay the payroll tax by April 15th. So you just have 15 days to pay the payroll taxes. For HST, it is usually one quarter. Every quarter you pay HST depending upon the income. And the incorporation taxes, it is per year. 1 year you will end up paying incorporation taxes. Narendra, add if anything is missing.
Yeah. So again, so HST basically, you can decide whether you want to do quarterly or you want to do annual. If you are on higher income, means you are making good amount of money in the corporation, normally recommend everybody to go on quarterly basis. That way, you are able to manage your cash flow properly. Otherwise, at the end of year, you will, if you have to come up with 30, 40, $50,000, it will, obviously going to hit you. Second thing is the corporation tax. It's annual, but keep it in mind whether it's HST or whether it's corporation tax. The moment you hit threshold of $3,000 in any year, you are supposed to make payment in installment. Even if you are registered for annual HST, even if you are uh, registered for corporation, means obviously corporation you are paying annually. The moment you hit $3,000 taxes in a year, you are supposed to make installment payments. It might be monthly, it might be quarterly, but you have to make. If you don't make it, then you will end up paying interest and penalties. So, and other thing that I want to add, especially who are incorporating new, during the first year, you have a choice whether you want your fiscal year end for the corporation as 31st December, or you want fiscal year end anywhere within for 53 weeks of the incorporation date. Normally, I don't tell this during this forum, but Sudhir told me that give some at least tips in this forum. Normally, I don't recommend anybody to have fiscal year end December, and it I normally recommend it should be something else than December. So, and to get the answer of that, please contact your tax consultant that why I would have said that. But normally, this is what I recommend. I recommend to go on quarterly basis of HST so that you are in uh, control of your cash flow. After filing your annual corporation taxes, if you see that you are paying more than $3,000, just ensure to ask your accountant, do I need to make installment payment for next fiscal year? If they forget,
Okay.
it's your responsibility to ask that should I be paying any advance taxes in installment for next fiscal year. Otherwise, there will be penalties and interest on all those because it's considered as late payments. So you'll end up paying installment interest and penalties.
Okay. So if you open an incorporation, do we need to pay initial taxes or
There is
create a
no
CR account?
initial tax.
Okay.
You start pay. I mean, if you don't have income, what income you're going to pay tax?
We don't have create any CR account
But
or anything.
still, but still, the moment you incorporate your company, you have
Mhm.
to file your annual tax rate, corporation tax return, even if it's zero.
Okay.
Unless you dissolve the corporation and inform CRA that company is dissolved. Till the time you don't dissolve it, CRA will come to you and ask you to file your corporation tax returns.
Okay. Because I heard that in few forum like within 60 days you need to do an initial tax
So that is
declaration.
that is initial return. That
Uh-huh.
normally happens automatically when you're incorporating.
Okay.
Yeah. So Narendra, 1 second. So
That
Girish,
is initial
see,
return for province.
yeah.
Okay.
First
So
60
Girish,
days.
yeah. So see, one of the imperative thing for a incorporation is that you need a tax consultant. Listen only to the tax consultant. Do not read through the forums, because they might not understand the exact correct situation where you are in. Because I have ended up I've seen people ended up paying lot of penalties because they read through the forums and they missed the payments, and they didn't consult a tax consultant. Even me, before I came to Narendra, I ended up paying around $700 penalty. That is why I left the old tax consultant and I moved to the new tax consultant, because that guy never told me anything, and I ended up paying like $700 tax, because this tax was getting accumulated and I never knew that. Also, when you are incorporating, everyone, try to register a business CRA account. It is very important. It's not only for business, if for personal thing also, try to incorporate a personal CRA account, where you will see all these data. So my recommendation is that you should focus, or you should listen to the tax accountant, work very closely with them. It is not once in a year thing. At least I'm not sure whether all tax consultant will meet monthly, but that is something which I personally do with Narendra, that once in a month we meet up, because that there is a lot of things to discuss for that 1 year. It is not just giving the credit card statement and paying the taxes.
And
Yeah, right
also,
now all
my
the CRS
my
are busy.
one piece of advice will be, uh, each and every person is different. So one situation may be applicable to one person, and it may not be applicable to other person. Lot of time I hear that, that my friend has done this. So, okay, your friend has done this, his situation may be different, but it may not be applicable to you because your situation is different. You are a different person. So, I suggest normally everybody keep these tax discussions to limit it to your tax consultant rather than discussing among the family, because it will create a lot of confusion between yourself. Every person is different, every family is different. In one means one of your friend may have kid, other friend may not have kid, so both situation are different. One person may be single, other person may be married with kids with parents, so situation is different. So what is applicable to that person may not be applicable to you. So just try
Okay.
to discuss all these personal finances among yourself, and this is my advice. Rest I leave to you guys.
Okay.
Because you
Yeah.
guys are very active on all these forums.
Last question: if you have a dividend, can we opt for a OHIP? Like, so if you're not going to payroll, and can we go for a OHIP? So if you want to go for a health card, they ask for the job offer. Like, so it's your own incorporation, but you're not going on a payroll. You're paying a tax on the
I am
yearly
not
end.
sure how OHIP work. Huh?
Okay,
Sorry.
okay. Yeah,
Sorry about
because they ask for the uh, job offer letters.
that. OHIP? I don't
Yeah,
think they ask for all those things. I don't think OHIP has anything to do with your job.
Yeah,
yeah,
I mean, I doubt.
Every person who is eligible for health card will get health card. You don't need to have job for that.
Narendra,
okay,
we are not sure, because this is the matter for the open work permit folks,
I'm
right?
not sure. That's
Yeah,
what I'm saying. But
yeah,
just I'm
okay,
giving a general view,
yeah,
right?
okay,
yeah,
Say if my father comes in, he gets a PR card. Obviously, he's not going to do job, but he's going to get
okay,
his health card. I am not sure about this work permit and
yeah.
how it
It's
works. Sorry about
complicated
that.
to ensure that
yeah,
Yeah,
they work here
sorry
in
about that. Sorry
Ontario,
about
right?
that.
Yeah.
I don't know
yeah,
about that.
Okay,
okay,
let's
yeah.
move on to
That's
next
it.
person, Hitesh.
Hi, thanks Sudhir, thanks Anandra. Um, my question is, in the incorporation, if we take salary, can we contribute to our spousal RRSP room to increase the tax credit and reduce the tax burden? That's the
Okay.
question I have.
So RRSP is different, salary is different. Okay. Don't mix both the things. RRSP is totally different. How RRSP works is basically every year when you file your tax return, you get a contribution limit. So CRS sends you a notice of assessment and it will say this is your contribution limit.
Right.
Now, how you want to use that contribution limit is up to you. Whether you want to use that limit for yourself and you contribute into your RRSP, or you want to contribute to your spouse RRSP. The difference between your own contribution is spousal contribution is that in your contribution you are the owner of that RRSP. The moment you contribute for your spouse, which is called spousal RRSP, your spouse becomes the owner of that
Correct.
RRSP.
Yes.
Now, the, if spouse withdraws that money after 3 years, then that spouse will be liable for taxes on that contribution. If that spouse withdraw that money within 3 years, then you will be taxed on that money because when you're contributing to your RRSP, you are getting tax deductions.
Correct.
So whenever you withdraw that money, if it's within 3 years, you will end up paying based on your tax slab. After 3 years, your spouse will be responsible for those taxes depending on that spouse tax slab.
Okay.
So spousal RRSP, those things is limited to RR. It has nothing to do with salary, how you're taking salary or what you're doing with that money.
Okay. Thanks, Narendra. So my main question was by contributing, if my spouse has a room, I can contribute
No,
while I'm in an
you
incorporation.
should have a room to make.
I,
If you are doing a spousal contribution,
yeah.
you should have room because it's your room which is going to be used, not your wife's room.
Yeah, once we fill in our room, can we fill into spouse room as well if we have more spare room on the spouse
No.
side?
So for your spouse, she has to fill in her room.
Okay. Okay. So if the husband is earning more and they can contribute to spousal as well, right? In case of
You can do that as long as you have the room.
yes, yes, yes.
Because it's your room that is going to be used because you are going to get tax advantage, not your spouse.
Okay.
Its only thing is that it's going into her RRSP.
Right.
She is the owner or he is the owner, but you are getting the tax advantage. So
Right.
it's your room that is going to be used, not her room, if you are contributing.
Okay. Okay. Yeah, I think yeah, we're at time as well. Maybe I
Yeah,
will.
last question, Bharat.
Thanks, Sudhir, for organizing this, and thanks, Narendra, for all your insights. So, I had an Ontario incorporation, but now I switched to full time. I have a couple of questions. One is even though there is no income and no HST collected, I have to file my taxes on a yearly basis. What's the easiest way to do this? Because tax consultants are charging FT amounts to just file zero HST and
Yeah,
zero
yeah.
GST.
So the best thing you should do is close your HST account with CRA. Okay, so at least next year you don't have to file HST return also, even though it's zero. And corporation now, earlier CRA used to allow filing within their system, but since last year they have stopped it. So you don't have any choice. You have to go to a consultant, and I don't know how much those people are charging, but yeah, they're going to charge you for something because then everybody knows that now you cannot file within CRA. So they know that even if it's zero, person has to go to any accountant and they're going to charge you for that.
Okay, thank you. And the follow-up question is, let's say if I close my HST account, can I reopen it in case if
Yeah,
I?
you can do that. Just keep your records of HST returns because
Okay,
when you will try to reopen it, they will ask you some information from the returns that you filed earlier.
okay, perfect. Thank you so much, Narendra, for your insights.
Thank you, Bharat. So those who are raised the hand to ask question, unfortunately we are at time and will not be. We had a hard stop at 9 o'clock and will not be able to answer your question. But feel free to reach out to Narendra offline or myself. We'll try to share as much information as possible. And we were able to cover only 10 or 20 percentage of what the incorporation financials is. We may have a follow-up session in May. Once this tax season is over, we will invite back Narendra back to the session, and we'll have a detailed session on how to manage the finances once the incorporation is started, because that is where a lot of people make mistakes. They don't know how to manage the finances. They think that it's a personal finance and they start managing it. Unfortunately, it doesn't work that way. So we'll have a follow-up session with Narendra on how to manage the finances once the incorporation has started. Okay, so thanks everyone for joining. And
Yesterday,
this, yeah,
before we
Narendra.
wind up, I have only one request to everybody,
Yep.
that for till 30th April, I may not be able to answer, give advices. If you need specific advices, so please contact me after 30th April. Before 30th April, you can contact me if you want to file your tax return or you want to use my services.
Yep.
But any kind of advices, I will be happy to give that after 30th April.
Yeah, so just a reminder, everyone, 30th April, you have to, before 30th April, you have to file the taxes. If you don't know that, reach out to Narendra or reach out to any tax consultant to get your taxes filed. Do not miss it, because it is very important in long run. And today I would like to thank Narendra for taking out time and showing up here in my show. Thank you, Narendra. Thanks a lot for sharing all these insightful information. And thank you everyone else for joining. And have a good night, everyone. Have a good one. Thank you, Narendra.
Bye, Sudhir.
Bye. Bye. Bye.
Thank you for
Bye.
inviting me. Thank you.
Thank you.
Bye.
Thank you. Bye.
Bye.